Happy Wednesday out there, folks. This is Darius Dale here to present our macro minute for Wednesday, August 10th, 2022. Starting with asset markets, you have stocks up this morning, commodities mixed, crypto up, dollar down, global bond yields down. Probably an understatement relative to the celebration. It's a celebration we're having out there in asset markets today on the heels of this very obviously dovish CPI report out of the U.S. for the month of July. So market moving headlines is the transitory crowd setting up to be vindicated this fall. So U.S. headline inflation slowed more than expected to 8.5% last month from 9.1% as gasoline prices declined. The core print, which Jerome Powell has indicated is more illuminating, stayed flat at 5.9% year over year. On a monthly basis, both headline and core consumer prices came in less than forecast. So this is something we've been talking about in our research as the bull case we were outlining in recent weeks is very clearly if inflation really starts to slow in a way that leads the GDP cycle, which is very anomalous relative to history. Usually you need to see a breakdown in growth, typically a recession, to cause inflation to break down. But if for whatever reason we start to see that in this particular juncture, we will see markets continue to trade like they traded since the lows of June. So continue to got to unpack the data. We don't want to get too far ahead of ourselves here. We're still updating the models and whatnot this morning, but certainly if we see anything that needs to change from a portfolio construction perspective, best believe 42 macro subscribers will be getting that signal either today or this Saturday. At any rate, no stimulus soup for you. Looking abroad at looking at the Chinese economies, Chinese consumer inflation picked up in July to 2.7%. That's the fastest print we've seen in 2 years, but it fell short of consensus and reflected a jump in pork prices rather than strong demand. Factory gate inflation, so PPI, slowed more than expected as an indication of that slowing demand. The manufacturing PPI tends to be very positively correlated with nominal GDP growth in China. The PBOC pledged to avoid massive stimulus and excessive money printing to spur growth. So they realize they're pushing on a string, and we going back to what we talked about in recent weeks. The confluence of zero COVID plus not enough stimulus equals China will continue to underperform both economically and from the perspective of Chinese asset markets. So no change to our views there. And then lastly, the scared bully pulls back. So China concluded its military drills around Taiwan, but pledged to continue regular patrols near the island. It accused Taiwan's ruling party of hurting chances for peaceful reunification. Taiwan said it detected 36 PLA warplanes and 10 warships in its surrounding regions. The tensions may lead to broad and lasting disruptions in cross-strait trade. So for now, it looks like we're sort of threading the needle on what appeared to be rising geopolitical risks. So if there's no China invasion of Taiwan, inflation's coming down faster than expected without a commensurate decline in growth, and at least for now. And then more importantly, we don't necessarily see an advance in geopolitical tensions in Europe surrounding Russia, Ukraine, and potential gas flows. Then you have what could potentially be a very bullish cocktail heading into the fall. Now, again, I think it'd be very clear here. We're not making any changes yet. If we do make changes, we're not going to signal them on the Macro Minute program. They're going to go to our subscribers to the extent we do need to reposition for an evolved distribution of probable outcomes that, again, is being evolved by the data rather than my own intellect or anyone else's own intellect. Anyway, big movers this morning. Two-year nominal treasury yield off 14 basis points to 3.13%. That's up 2 basis points month over month. 2-year dollar inflation swap rate minus 11 basis points this morning to 3.18% off 18 basis points month over month. Guess who loves that? Guess our friend the NASDAQ up 2% to 10% month over month. Ethereum plus 7% to plus 54% month over month. So very clearly the digital asset space, whether it be through technology shares or through cryptocurrency, really loving this inflation, because ultimately it means you're talking about a sooner than expected inflection in the liquidity cycle as opposed to a delayed inflection. At any rate, getting into our volatility adjusted momentum signals and probable ranges, Bloomberg Dollar Index, BBDXY, that is still bullish, very oversold here now. But now you have to wonder, is the market now going to start to price in the dovish pivot, coming sooner rather than expected? Could we see this transition to neutral VAMs? Perhaps, but again, you got to understand that the dollar is trading against other global currency pairs, what's going to happen in Europe, what's going to happen in Japan. Obviously, we got a gong show out of the Bank of England, so it may be it could be a holding pattern in the dollar for a while, at least sideways. But this is definitely, in my opinion, one of the most important assets to be watching in the coming weeks. Gold, bearish VAMs, still overbought, been presaging this CPI report and this weakness in the dollar on a temporary basis by consistently being overbought and trading above the upper bound of its probable range. It looks like it wants to break out again, as we talk about in this program. When you see a security price violate the upper boundary or lower boundary of its probable range for an extended period of time, what it's telling you is that it no longer believes in this state from a VAMS perspective, from the momentum signal perspective. So again, those processes are quantitatively linked. Bearish VAMs assets have a negative skew in the probable range distribution, in so much that bullish VAMs assets have positive skew in the probable range distribution, and neutral VAMs assets have Gaussian skew. So just be aware of that. 10-year nominal treasury yield, neutral VAMs in the middle of its probable range. High yield credit spreads broke to neutral VAMs last week. You got about 10 basis points of downside, 65 basis points of upside. S&P 500 neutral VAMs. Market was smarter than all of us here on the inflation print here. You got about 60 basis points of upside, 6% of downside. VIX bearish VAMs still in the middle of its range. NASDAQ 100 neutral VAMs got about 1.5% of upside, 8.4% of downside. Russell 2000 neutral VAMs, that is overbought, has been hugging the upper bound of its probable range for a while now. Bitcoin bearish VAMs, that's overbought this morning. Same thing with Ethereum bearish VAMs, overbought. Have we seen the lows of these things about to break out to neutral and maybe bullish? Again, we don't need to speculate. We can observe. It's okay to observe, especially when you're positioned well from a portfolio construction perspective. Shanghai Composite, neutral VAMs, still in the middle of its probable range. WTI neutral VAMs just not participating in the fund. So allegedly, if everything's all green lights and all systems go, then we got to start pricing in a better economic outlook into the price of crude oil. In our opinion, you're not going to leave crude oil behind. Eventually, it's going to recover. In our opinion, if we continue to see asset markets trade positively. Ag, industrial metals, both bearish VAMs, but looking like they bottomed and recovering. We don't want to make too firm of a declarative statement on that, but certainly have not seen the kind of weakness in these segments of the physical commodities market relative to crude oil. So maybe oil's just catching down to where they had already been, and maybe oil will eventually find its bottom, just as if these things are in fact leading the physical commodity cycle. But anyway, they're both bearish VAMs still and overbought this morning. So with that, Darius Dale presenting our macro minute for Wednesday, August 10th, 2022. We got Nadine Turman from Macro Bundle Live Q&A this morning. Join us at 11 a.m. Eastern for that, for our Macro Bundle and Portal Pro subscribers. And then I'll be on the Real Vision Daily Briefing this afternoon with my friends Andreas Steno Larson and Weston Nakamura. So catch you later this afternoon as well. Cheers.